Are we on? Okay. Good morning. My name is Katrin Bennhold. I work for the New York Times in London, and it's a pleasure to welcome our next speaker, Ben van Beurden, Chief Executive of Shell.
Thanks, Katrin.
Now, this session really is about whether there is a future and what that future looks like for oil and gas companies like yours in an increasingly decarbonized world. Shell, of course, is no stranger to Reinvention. The man at the origin of the company sold antiques and imported seashells from the Far East. That was in the 1830s. So from seashells to fossil fuels, what's next? What's your business model for 2050?
Well, you're absolutely right, Katrin. There's a lot of innovation and change in the history of our company. I think actually the biggest threat that we had to confront, other than moving from shells to kerosene, was actually dealing with the electrification of society, because that actually was a major and finally a terminal threat for the kerosene industry. So we had to reinvent ourselves as early as the beginning of last century. But we've gone through a number of reinvention cycles. We've been in coal, we're out of coal. We've been in nuclear, we're out of nuclear. We've gone into solar, half out of it, back into it. Wind, the same thing. So things change quite a bit, and I would imagine that we will continue to adapt our business model and our portfolio over the next decades. And, you know, looking further out, yes, I do think we will still be in oil and gas, but it will be much more gas than oil. I do think we will be even bigger than we are today in biofuels, and today we are already the largest biofuels player. I would expect us to be a significant player in real new fuels like hydrogen as well. You could argue we're probably one of the biggest hydrogen players at the moment. It's just that the market is almost negligible. And I think we will be larger in other things like petrochemicals and in energy solutions that are much closer to the customer, that somehow through decentralization and digitization, which was mentioned earlier on, requires a different relationship with customers.
Let's put some numbers on this. At the moment, your portfolio is about 50-50 oil gas, a little bit more gas. In 2050, you're looking at about a third oil, and then 2/3 gas and renewables, I'm told. How much actually will be renewables in your various scenarios in 2050?
Well, I think it depends a little bit on how the world will play out and what sort of business models we can succeed with. Of course, the growth of renewables has been remarkable, and luckily so. But the capacity of the industry to make money in that segment has been remarkably absent. And we will have to find a way to participate in a renewables-dominated energy system in a way that allows us to continue to make profits and pay dividends and everything else, because ultimately that's also an aspect of sustainability that is important. We think that under the most likely scenarios, solar will be the main backbone of the energy system in the second half of the century. So I would expect us to be a major player in solar as well.
Major meaning, like, you know, give us a number, roughly. 2/3
No,
gas and renewables?
I think
how much of that?
I think it will be hard to predict. And it depends a little bit on what it is that you are going to invest in. I cannot see easily, by the way, maybe it will change, I cannot see easily how we can be a major successful participant in developing new photovoltaic technology. I mean, if you want to do that, you know, better start off with expertise in that field rather than start off as a bunch of geoscientists and chemical engineers.
Or antique salesmen.
Or antique salesmen. Well, okay, they are a different breed. They made a good transition there. But I think investing with renewables, which is what we are doing at the moment, being an applier of large-scale renewable technology, maybe in a hybrid system with gas, so integrated energy solutions, I think that can be a major business for us. How big can it be? Hard to predict, but I would imagine it is going to be more than the sort of 1 or 2% that you currently see in global energy system.
I mean, it's interesting. You mentioned dividends and so on. I mean, one reason a lot of these very profitable solar companies aren't paying dividends is because they are growing so much that they're reinvesting the money, which is, of course, the sensible thing to do when you're a very fast-growing industry. So I'm wondering whether you're hearing anything from your shareholders, whether some people are saying, well, look, maybe you should move some of your CapEx spending over the next 10 years into renewable investments, because if you look at the risks, they're often substantially lower, and if you look at the internal rates of return, they're not that different.
Well, yes, we do hear a lot from our shareholders on this, and actually most of the things that we hear is whatever you do, make sure you keep on paying these dividends. And many of our shareholders take a somewhat dim view on the dividend-paying capacity of the renewables industry. But I would like to prove them wrong as well. So I think we need to experiment with new types of business models to show that you can actually make money in renewables. And I'm not entirely sure whether the absence of dividends is entirely because of the reinvestment. The absence of profits in that same sector is maybe a different matter that gives also away that this is a very tough industry to succeed in. They are indeed lower returns, but they are probably also low risk. You're absolutely right. So we will have to find a way of participating in this industry that makes sense for us. Now, there's many ways to do it. At the moment, we are in the United States. We have a wind business, not a large business, but it's still a significant wind business. And on the back of it, we trade renewable electricity. We are actually the largest renewable power trader in the United States. And we use our wind business. We use a few other things that we have, including access to hydro that we use for storage to provide uninterruptible renewable power in Silicon Valley. We're the largest player in that place. And we make a lot of money on it. So, that's participating and actually enabling renewables without having to be an inventor of the next photovoltaic technology.
But just briefly on the investment thing, let's just make this a little bit more interesting. If you had $1 million to spend today, and you could choose between an oil and gas, a wind, and a solar PV project, all with the same rate of return of 18%, where would you put your money?
Well, you would have to put it in, indeed, a solar PV project, because it is probably a lower risk project. It is probably also a more future-proof project with everything that we know at the moment. But the reality is, we don't have that situation at the moment. As a matter of fact, we just set up a new energies business, which is basically an aggregation of our existing sort of renewables and renewables associated businesses in one entity, with a view of really ramping this up and making money in this field, finding new business models, but also developing new technologies, getting into markets, and having a more bespoke focus on what it takes to succeed in that part of the business. It's very hard to come up with a sufficient number of investment propositions that actually make sense. I'm determined to succeed in it, and I'm determined to show up when we have succeeded to our investors and say, listen, here is an example of how we can be relevant, bring our competencies to this sector. But at this point in time, of the $30 billion that we invest this year, I cannot find a significant percentage to invest in renewable projects, simply because they are not there.
There's one sort of emerging issue, which is sort of this issue of what responsibility you have to your shareholders as a big company. One is, of course, the fiduciary responsibility of providing the returns, and that's what you've been talking about. But we're now seeing emerge another strand of thought, and that is the responsibility not to incur future liabilities for damage done through climate change, as it were. So this debate is sort of kicking off in the US. Is this something that keeps you up at night, or?
Well, yes and no. I think you're absolutely right. The whole debate around climate change, the role of fossil fuels, the role of companies like us in it, has become much more mainstream center stage. And of course, with modern communication technologies, and I think with sort of global trends, certainly among millennials, this has become an issue that of course no company can ignore, if only for the fact that we need to be able to also attract talent in our industry. We need to be relevant, we need to be attractive, and we need to therefore be a company of the future. It's easy enough to take a view and say, well, listen, there is no alternative to fossil fuels for a long time to come. Probably fossil fuel demand will grow because of sort of unstoppable demographic forces in the world. So therefore, we can stay with our knitting and we can just, succeed because there is no alternative to us. I think that is a dumb strategy. That is a strategy that also I do not want to participate in. And it is a strategy that will ultimately also run out of running room. So yes, we have to be relevant. We have to be reinventing ourselves, but we have to participate in the debate as well. Lest the debate doesn't go to a place where it's actually becoming unproductive, which I think in some areas it is at risk of doing. In some areas we are at the point that the debate becomes simplistic, that somehow the debate is being reduced to, well, if only you guys wouldn't supply the fossil fuel, the problem would be solved. which of course is, making the problem almost ridiculously simple. If you want to make an energy transition that we have to make, this is going to be an unbelievably complex undertaking that will take a lot of hand-holding, a lot of intelligent policy making, yes, a lot of proactive thinking and preparedness from companies to put their money where their mouth is, but it will be a complex undertaking. It is not something that can be wished or somehow can happen overnight if somehow somebody can get through to people like me to change their mind on it. I've changed my mind on this a long time ago. Yeah.
So if you're going to stay in fossil fuels for the foreseeable future, and massively so, if it sounds like at least 2/3 of your portfolio will remain in gas and oil for many, many decades to come, the net carbon zero future will require some kind of carbon capture. Where do you see the net bit coming in terms of Shell itself? What sort of methods do you think are most likely to emerge in innovation terms? CCS has been talked about a lot, but we haven't really seen a consensus on what's possible. It's been around really for 10 years, people have been talking about it, but what is realistic here in that space?
Well, you're right. I also mean society, will have to somehow live with fossil fuels for some time to come. There is, in that sense, no alternative. Even if we would electrify or make the entire electrical system renewable, we would still have to currently contend with 82% of the rest of the energy system being not electrical demand. So we will have to deal with reducing the carbon intensity of the fossil fuel system. Probably have to work on energy efficiency dramatically as well. But there will always be a need for fossil fuels because some of the energy or some of the carbon that we currently consume as an alternative at this stage, and probably will never have. Carbon capture and storage, yes, absolutely, will have to play a role in it. I think there is amongst experts, and we have the same mind, there is no alternative to it. We cannot achieve 2 degrees C, let alone 1.5 degrees C, without very large, massive uptake of carbon capture and storage. The problem with the technology is it doesn't make any economic sense to do it. Nobody is going to pay me for taking carbon out of the air or out of our waste gases and sticking it into the ground. There is no customer in that equation that pays for this. So there needs to be a mechanism to provide a business model for this, which is either putting a significant price on carbon, which we are a great proponent of, not just for carbon capture and storage, but in general, to move from coal to gas, to reduce energy consumption in general, but also to enable carbon capture and storage. But on top of it, we will need in the early years also capital support for the technology, much like we have done for wind and for solar. Have provided massive subsidies to make sure that the cost of this technology come down, and we will need something similar for carbon capture and storage.
But just very concretely, I mean, as I said, we've been talking about carbon capture for 10 years. Every company sort of mentions it's almost like the get out of jail card of the oil industry, but nobody really has come up with a plan. So I wonder, can't you come up with some collaborative effort, some high-level engineer group of people across companies that figure this out once and for all?
Well, the technology doesn't need to be figured out. The technology exists. There is quite a number of carbon capture and storage projects that will demonstrate it. We have one in Canada on our oil sands, which stores about a bit more than 1 million tons of CO2 a year. That's equivalent to taking 250,000 cars off the road permanently every year. So it exists. The point is, the commercial framework doesn't exist.
So you need governments to step in. And what kind of carbon price? I know you internally have 40 euros you work with 40 euros. That's probably not high enough if you talk about carbon capture. I mean,
I think in the shorter run we'll need a little bit more than that. I think it depends a little bit on what you believe in, where the cost of this technology will go. But I think we'll probably need something more than $60 to $80 a ton of CO2. And then a little bit of help also to make sure that we get onto this technology learning curve. Because ultimately, this technology will get more affordable as there is more R&D and application being put into it. And that actually comes with replication of projects.
So, we haven't got a huge amount of time left, and I will open this up to questions, but I want to just ask you one final thing, because you mentioned that this is a big issue. This is something that is important for the world. We're all united in this wish to keep temperatures from rising by more than 2 degrees Celsius and ideally by less. You're a father of 4. I have 3 children of my own. In fact, your colleague from Paris at Shell here is 5 months pregnant, so the future generations are literally in the room. Although you all know what Groucho Marx said about future generations, right? What have they ever done for us? But more seriously, there is a kind of moral imperative here, right? You've been with Shell for 30 years. Taking off your hat as CEO and putting on your hat as father of 4 children, to what extent does this moral imperative inform your day-to-day?
Well, it does. It, like in every other household, climate change gets discussed, along with sort of feminist issues. I have 3 daughters, so you can imagine that is also another topic, but that's maybe for another conference.
Nice.
But it is important. And it is important for all of us. And it is, and it's a little bit more poignant maybe for somebody in a role that I am in. I remember an anecdote that I told earlier on. My second daughter is 10, and I remember a year ago when I caught her crying in bed when I thought this was to do with the fact that I was going to leave again together with my wife for a weekend. She said, no, Papa, that's not it. It is, we have been talking about climate change at school, and I cannot get my mind around it, that the world is going to be destroyed by climate change. And the teacher said that, the only people who can solve this is Greenpeace. So we need to give money to Greenpeace, Papa. And they also said that actually it's the oil companies who are causing all of this. And so what are you doing about it? Well, that's a tough one to answer to a 9-year-old.
Wow.
And this is a true story. This is not just what invented here. So it is difficult, and it's a good practice to sort of talk to your 9-year-old daughter and say, well, it's very complex. But it also has to do with energy efficiency and choices that we make, and think about the energy that we use, and then think about the fact that large parts of the world only use 1/10 of the energy that we use. So think how privileged we are, and we have to make room for these people as well. And it's going to be very complex, etc., etc. I think I could sort of half get her there, but I could only get her there, and the fact that we are actually in this to help solve this, because it is something that is important for me as a father, but also for me as a leader in an oil and gas company. The only reason why I could get her to somehow believe me was that I could start with, do you trust Papa to do the right thing? And she said, yes, of course I trust you. And in that sense, she's different from the rest of society.
On that note, we've got about 5 minutes for questions. Yes, please. We have a mic coming your way.
Thank you. I'm Joost Smit from the Dutch Investors Association, VEB, and the investors are looking for good dividends, but favorably not paid by death, by that meaning. But we also look for disclosures, quantitative standard disclosures of the impact of climate change on companies. I wonder what's the position of Shell towards the Bloomberg Task Force on Climate Change disclosure, and is Shell ready to engage that task force like the Italian Eni company does?
Let me not get into the specifics of one initiative. I think disclosure in general, I think is good, but it needs to be done in an intelligent way. I think there's different views on disclosure. There's people who say, well, disclosure is bad. It will sort of distort the playing field. It will make access to capital more difficult, etc. I think if you do it correctly, that doesn't need to be the case. What I do think, though, is that indeed there is an aspect of level playing fields. Yeah? So we talk about carbon disclosure in general. All the private oil and gas companies combined produce 7% of the total energy production. The other 93% is produced by companies who have no disclosure obligations ever because they don't have shareholders. So, fine. Let's make sure that there is a real understanding on what is happening in companies like us, to provide comfort to indeed investors that we are doing the right thing, that we are resilient as a company and an industry. I'm all for that. But don't think that we can disclose the problem away of climate change. And be aware that there could be unintended consequences to sort of unlevel playing fields and impractical disclosures. But in general, we are in favor of transparency, yes.
2 very quick more questions. Let me get a lady. Oh, there we go. Mic is coming.
Hi, I'm Marcine Broadwater with the International Finance Corporation of the World Bank. And I'm interested in what you think are some of the major obstacles and barriers for you to invest in renewable energy. You said of your $30 billion that you guys invest in capital every year, that you're having a lot of trouble getting money out the door in terms of renewables, in terms of profitable investments. So what are the real obstacles to doing that? And do you see that changing in the future?
Yeah, it's a very good question. I'll repeat a little bit what I said. Yeah? If you take the 10 largest solar companies in the world, they collectively invest $5 billion a year. Yeah? That is the 10 largest solar companies in the world. That gives you an idea of the size of the investment universe that is available. This is just solar then. So it is still relatively small. And indeed, these 10, by the way, collectively have never paid a cent of dividend and have never made a positive return on their capital employed. So that is the first problem. Yeah? Now, that problem I think we are gradually overcoming. And we are overcoming it because costs keep on coming down. New business models are being invented, including the business models that we can participate in. And I mentioned a little bit sort of the one-off example in North America, but others as well. So I think we have to work harder to figure out what are the business models in this area that enable renewable investment. We don't have to be the inventors of the next sort of aerodynamic wind blade or the next PV cell, but if we are a large-scale investor in utility skies, power plants, maybe hybridized with LNG so that we have integrated energy solutions for communities, that can be something that really makes sense. And I think there is therefore models that are now emerging for us to invest in, but I think it's a matter of time before it picks up.
I think total investment in renewables right now is closer to 310 billion, and 80% of that is in generation assets, which is profitable. Yeah. So there is quite a big market. I don't want to take up more time. I just wanted to throw that in. There was one more question here.
Question on CCS. CCS is a way to buy, let's say, time and carbon budget for oil and gas. Isn't it also a risk for gas in case for instance, China decides to put a lot of money and develop CCS and put it on every coal-fired plant? It might save coal and be bad for gas.
Yes, I think there is, of course, a little bit more carbon to be captured in a coal plant than in a gas plant, and it's a little bit more difficult to do it in a coal plant than a gas plant. But hey, I think when it comes to this technology is going to be needed. So we should embrace the application of the technology. I think in the end, gas needs to stand on its own legs. It needs to stand on its own legs economically as well. I think CCS is probably going to provide a little bit more level playing field for oil and coal, for gas and coal than we have at the moment. But in my mind, the more important imperative is to embrace the technology and to make it happen. It's a bit like the discussion that I heard the tail of earlier on about putting a price on carbon. It doesn't matter how you put a price on carbon, as long as there is one. So in the past, we have been, I think, somewhat waylaid as an industry or as companies to have an endless debate on whether it should be cap and trade or a carbon tax or something else. It doesn't matter, as long as there is one. And I think the same is true for carbon capture and storage. Let's get on the learning curve, and then I think we can talk about how we apply it.
I'm afraid we're going to have to leave it there, but we're on to the next panel straight away with my colleague Keith Bratter and Total. So, thank you very much.